BlackRock, one of the world's largest asset managers, announced that it has limited investor withdrawals in a major $26 billion credit fund. This situation indicates not only investor panic but also a liquidity crunch in the market. This is because while investors want to withdraw their money, the funds cannot easily sell the assets they hold. The private credit system grew as banks no longer wanted to provide flexible loans to small and medium-sized enterprises. While large banks turned toward more standardized and scalable products, private credit funds began lending to riskier companies at high interest rates. During the same period, private equity firms also expanded this market through debt-fueled buyout models. Over time, the system transformed into a massive structure operating on a debt-on-debt logic. During the low-interest rate era, this model seemed highly profitable. As investors saw annual returns close to 20%, more money flowed into the market. However, rising interest rates have begun to strain the system. This is because private credit debts generally have floating interest rates, and as the central bank raised rates, the interest burden on companies multiplied. Debts that previously seemed manageable have become unsustainable for many companies. Furthermore, because investors can now obtain high returns even from risk-free government bonds, the risky returns offered by private credit funds have become less attractive. Meanwhile, the economic slowdown, layoffs, and declines in corporate revenues have made debt repayments even more difficult. The rising risk of bankruptcy, particularly among medium-sized companies, is drawing attention. The scale of the problem is alarming. The total size of the private credit market is stated to have reached approximately $3 trillion. This figure is even larger than the subprime mortgage market during the 2008 crisis. Moreover, these loans do not just finance housing, they fund corporate payrolls, inventories, and daily operations. Therefore, the impact of a potential collapse could spread directly into the real economy.